because of COVID and traffic disappearing in so many places, people were like, oh my God, this is how clean the air could be. So I think it's going to help, sort of drive the politicians to do something to get there.
That's assuming there's nickel in batteries. Because if I listen to Tesla, LFP batteries are the future.
Yes, it's all over. Nickel's done before it even got started.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up at the end and do leave your comments below. It helps us understand the sorts of questions you think we should be asking, how you think we've done, and of course, what you think of the individual, the interviewee. You can also catch this as a podcast or read about it in a transcript or article in cruxinvestor.com. Plus, of course, for Crux Club members, you've got early access to this video. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Mark Selby. He's the CEO of Canada Nickel. He's also a nickel market commentator, having 30 years in the industry. He's going to join us for a weekly catch-up as to what is going on. We talked today about the nickel macro, what's happening in China, recovery rates, supply chains, etc. We also look at some of the market information, such as Tesla's LFP battery. What's the impact of that? What is the automotive industry going to be doing in terms of design for batteries for cars? We also look at some M&A activity, two big acquisitions this week, what the potential impacts there are and what it says to the market. So take a look in the description below, some of the topics we discussed. Anything that interests you in particular, click the number, that's a timestamp. I'll jump you to that part of the video. Otherwise, enjoy what Mark has to say. Hey Mark, how are you doing, sir?
Good, Matthew, good to see you again.
Well, thanks for joining us. In fact, you're going to be joining us far more regularly. We've agreed to do a weekly catch-up in the world of nickel now that people seem to be turning their heads towards it.
Yes, after a decade in the woods where people weren't particularly interested in the metal, I think, the EV overlay, and I think a lot of people realizing that nickel is going to be the most important metal in the cathode of the battery, seeing much more interest. So I'm glad people actually want to hear about it.
Oh, they do. They do. And, we've had lots of inbound questions. We're going to talk about some of those today. And if they want to continue sending those questions in, we'll be here to answer them each week. So I think that'd be pretty exciting stuff, I think.
Well, yeah, no, looking forward to it.
Good. Okay, well, let's start with the macro thing, because people need to believe the nickel macro thesis. There's been a lot happening. When we first started talking about this before, Christmas, I think you were the first one to call the fact that there would be a dip, and we were sort of riding on a bit of a high back to August, September, and you called that right. Yeah,
no, hopefully, you get lucky every once in a while, but hopefully I'll be a little more right than wrong as we go through. So you guys can keep track. I always like to keep track of my predictions. So you get a little scorecard.
We will for sure. But okay, but back to today. Obviously, COVID's had a massive impact on supply chains all around the world, all commodities, all sectors, quite frankly. And I think there's been a lot of second guessing as to what the brave new world will look like, and how companies, how commodities will fit into that. So there's some news out from China. It seems to, and we did talk about it a couple of weeks ago. You said that they are recovering.
Yeah, I know. We talked about a month ago and said, look at, and I think a month before that I said, when you get to a bottom, these are the kind of indicators that give you a good sense that things are moving higher. So I'm pretty happy that since we talked, you've seen copper prices move up more than 10%. Some of the other commodities have also moved up in that time frame. And again, I think you're continuing to see those macro set of indicators to show that China is giving things a big infrastructure push, and that is translating into demand across the entire metal spectrum, bulk, space, and so forth. And that's not going to slow down. And again, I think as the other countries come out of their COVID crunches, you're going to see you sort of see similar programs come to the fore.
But if you think about that, obviously COVID's not only has it affected supply chains across the world, but mining specifically, we've produced less of a lot of commodities during this time. Even people who managed to kind of keep the mines open were struggling to, struggling some degree or other, and they've had some impact on the bottom line. So what are these supply deficits going to do specifically in nickel?
Yeah, so again, that's a great point. COVID's had as much of an impact on different people, on different metal supply situations, and that's I think critical to understand which metals are going to come out of this better than others. Where nickel was really impacted was the Indonesia, not so much, but the Philippines, which supplies the bulk of the ore that is needed to make Chinese nickel pig iron. Large portions of those mines had to shut down. So you had literally INSG put out their April numbers a little bit ago, and you had global supply shrink by about 12% year over year, and a big chunk of that was in the Philippines. You had a few other remote mines shut down during that time frame, but that huge chunk of ore not being there caused ore stockpiles in China to drop down to multi-year lows. That's what helped sort of push nickel up. Nickel went first versus some of the other metals back in March, April, because it was clear to the producers there. It's like, oh, geez, there's the Indonesian ore ban came into place in January, so our really only source of nickel ore is going to be the Philippines, and COVID just shut that off as well. So that caused a little bit of not panic, but concern, which led to, people really restocking material to make sure they had it just in case, the Philippines ore ban, shut down for longer.
So what is the impact of something like that? Because, if I look in the uranium space, you've had two very big producers, shut down because of COVID, still not back up and running. I mean, they've got a whole different bunch of, issues around pricing, etc., price discovery. But in this instance, do people like the Philippines say, I tell you what, we have been shut down, but we're going to play catch up here? Or do they say, well, actually, it kind of suits us well because it could be the beginning of driving the nickel price back up? And how do they react?
Typically, mines have some ability to crank it up a little bit, but in this case, a lot of those mines, are able to sort of, push at capacity as much as they're literally just digging up dirt. That's what that laterite ore exports look like. So, they sort of push to capacity already. And where they sometimes are able to sort of provide more supply is they may have lower grade stockpiles that they don't ship because it doesn't meet a minimum cost. But because the Indonesian ore ban was pulled forward to January of this year, those Philippine ore stockpiles, basically any Philippine ore people could get their hands on, went into China already in the second half of last year. So, where it really, has an impact is, there's an X amount of production that's not there, that's going to reduce X amount of stockpiles, which is just going to tighten up, the supply demand supply demand balance and the material available, for that particular metal. So, coming back out of it, the Philippines won't be able to sort of turn it up another 25 or 30%. They were planning to do already because of the Indonesian ore ban. So, they're not going to be able to, fill it up too much. And the big issue for this fall, so I think we're going to trade sideways in nickel through till September, October here, is it's rainy season. You can't dig up dirt when your trucks just sink into the mud. So there's a 4-month period where Philippine ore exports drop off, and the same thing used to happen in Indonesia. And when both of them were there, they were a little bit off sync. So in terms of supply to China, across the entire year, it was relatively smooth. But now that Indonesia is out of the picture, the Philippines now needs to produce everything, not just for a 12-month period, but basic for everything for a 12-month period, and get it shipped out in 8. So the Chinese market is going to have 4 months where there's there aren't going to be a lot of ships coming from anywhere with ore supply. So that's going to create an interesting dynamic, kind of October, November, December, January next, this later in the year.
So I mean, it's starting to get really interesting here, because you've got Indonesia out of the picture. Get it? Okay, we've talked about that previously, and we'll put a link to that video in here. Philippines struggling. Rainy season is a big impact. I hadn't appreciated that. We've had a big supply disruption for the last 3 months or so. I'm trying to understand pricing. It has been a fairly erratic pricing. We've talked about super cycles, and we've talked about scrap impacting pricing, and now you've kind of got all of these sort of issues that we've just discussed. I mean, when's nickel going to find its feet, or when is things going to settle down in terms of the supply into the market? The demand's there, but when are they going to be able to get control again?
No, I mean, nickel's always been volatile, and because you've got, and I think it's going to continue to be volatile. So, again, if you look back over, the last 12 months, so we first talked in September last year, it was 18,000, said, hey, that's not sustainable. Scrap and nickel pig iron production is going to take it down to 12 to 13. COVID took it down to 11 in February. We saw the market, because that supply from the Philippines came out, that really tightened up the market in China. So we started moving back up, say, $12,000 a ton, relatively quickly. And we've, flirted with getting up to 13,000 in the last few weeks. But with the macro indicators in the March-April timeframe, that sucked a bunch of material into China. So you had people, export to finished nickel to China. So in China right now, everything's, stockpiles are starting to creep up again. Pricing's kind of come off a little bit. And so, that's why I think from now until October, the gap that sort of opened in March, April has now been filled up. And so, I think we're going to trade sideways here for 3 or 4 months. And the big question for next fall is going to be, okay, yes, Chinese NPI is reliant on this material coming from the Philippines. Indonesian NPI is ramping up. You've got a bunch of plants ramping up as expected, and you've got large amounts of nickel pig iron now coming from Indonesia to China. So that's going to be, the key question in that October, November, December, January period is, okay, how much stronger is Chinese nickel and stainless demand growth going to be? Again, I think it's going to be, continue to be strong as China tries to, and the world tries to reflate its economy. Indonesian nickel pig iron will be strong. They're going to continue to push out as much as they can, out of Indonesia as these plants ramp up. And then it's going to be, how much ore is the Philippines actually going to be able to deliver in time, and build up stockpile. Again, you need to build up stockpile for that 4-month period. What's that going to look like? So it's going to be an interesting, 4-month period. And again, it's going to depend on the rains in the Philippines, the ramp up in Indonesia, and then sort of where global stainless demand is going to come out. I think it's going to be, we're going to be a net positive that by January, February, we're going to be up sort of 5 or 10% from here. But it's going to be the dynamic between those 3 key variables.
Okay, and there's also been an earthquake.
Yeah, no, things popped up a little bit last week or two, because there was I think a magnitude 5 literally just off the coast of Sulawesi, where there's a bunch of plants. I don't think there was any significant damage, but it, again, allowed the traders to squeeze out, a few more dollars per ton than they otherwise would.
China, okay, China, it's always China. So they're going to spend a lot of money, trying to get the economy going, big infrastructure projects. I haven't seen the same sorts of moves from anywhere else in the world at the moment. I mean, you must look at the macro story, because, you've got all this quantitative easing going on, all this money being pumped into the economy, and, different countries are approaching it different ways. But are there any clues there on the macro side that suggest the US is going to do infrastructure projects which they're going to need nickel for, or, across Europe or any other big, centers? Because I'm not seeing it yet. But if it does come, it would be quite an interesting spot for nickel. And I guess the other question is, what's your view on the automotive sector as well? Because again, during the crisis, I think people were a bit nervous about, consumers wanting to spend a lot of money on a big unit cost like a car, having just experienced one of the worst, periods of their lives probably.
No, I think where it's going to be more manifest globally, I mean, there will be some infrastructure spend, but, in the West, it's consumer spending. That's the big driver. And then consumer goods that consume a lot of metals. And I saw your interview with Andy Holm again, I was always enjoy his commentary, and I would really want to echo his comments there. I think the theme that you've heard from politicians in the West is we need to reshape our economies, because let's take advantage of this catastrophe in terms of COVID crisis as an opportunity to reshape our economies in the way that we want to do it. And again, the politicians realize, okay, we now have license to spend a lot of money. So so I think you've already seen it in Germany and France. You've seen, I think, Australia and New Zealand are looking at incentives. So I think one of the big winners of this is going to be electric vehicles. So it's let's take this opportunity to get people to spend money and by buying cars, because they're big ticket items, and the incentive is going to be to buy electric vehicles. So again, China's made steps down this path. France and Germany have as well, and I think you're going to see programs all around the world that will sort of incent people to go more towards electric vehicles, which is just going to sort of pull that curve forward than it otherwise would have been. So nickel, cobalt, lithium, all the battery materials are going to be big winners in that kind of environment.
Well, I hope so. I hope we do take the opportunity to reshape our future and redesign it. And obviously, I think batteries. People were unsure for a period there, but I think you're right. That's the kind of feedback we're hearing. And Andy Holm was a great proponent of that. He's the Reuters senior metals correspondent we spoke to last week, but others too. But I'm trying to find an unbiased voices saying the same thing.
Right.
Is important. So, but there's some clues. There's some clues in the marketplace.
Yeah, no, I think again, just watch the programs as they're. I mean, again, we're going to be tracking that, but again, encourage investors to see, if heaven forbid that the United States actually does something like that. In more state, either at the federal level, it won't be the federal level under Trump, but maybe the next government, or at a state level, if you start to see it. Because the key thing here is, again, one of the challenges about selling, sort of the electric vehicle future is it's going to be cleaner. And it's, people go, okay, well, how clean can the air be? But because of COVID and traffic disappearing in so many places all around the world, people are like, oh my God, that's what blue sky actually, really looks like. It's like this is how clean the air could be. So, again, I think for there's a real generation of people who are very focused on it, and I think they've actually seen this very credible, real sign of this is what it could look like every day. I think is going to help sort of drive the politicians to do something to get there. So.
That's assuming there's nickel in batteries, because if I listen to Tesla, LFP batteries are the future.
Yes. Oh no, that was again. It's all over. It's again. It's nickel's done before it even got started. No, I think the key piece here is, the battery component of an electric vehicle and that whole sort of delivery of electricity into the motors. That's going to be the key differentiator for electric vehicles, like the engine is for a car. So we don't have one engine for every single car globally, and it's going to be the same thing for electric vehicles. You're going to have, a small low-end option, the 1.2 liter or the 1.6 liter, and then there's going to be the 2 liter turbo equivalent. And in this case, it's going to be, around range and energy density. So you'll have a low end, a medium, and a high end. Nickel is what gives the batteries the range. So in China, it was a specific situation. They needed to hit a specific price point. And again, in a low end, if you need something that's going to go a few hundred kilometers, again, if you have two cars or if you live in a very dense city, that's all you need. So, my view was always, and I think I've said it in one of my videos earlier, that, I've always seen that this is the way the market's going, is you're going to have a very cheap battery chemistry that will be short range, but is perfect in North America for a second car, and perfect in Asia and highly dense cities, for that scale. You're going to have your mid-range Camry, sort of Honda Accord, Civic, whatever the equivalents are in Europe of your average car, and that'll be a good nickel chemistry battery. and then there'll be the high end that gets you 200 extra kilometers and gives you this much faster discharge, so your car can go even go 300 kilometers, 0 to 300 in 4 seconds as opposed to 5 seconds. And that'll come at a premium. And again, but nickel is going to be a big part of that battery. So, what I was surprised at is just before COVID got going and it kind of got lost in the COVID noise was, GM, very middle of the road. I was shocked that they basically said, look at, we've got one major battery technology and we're going to use that as the base battery for our platform, and it's 90% nickel. So the same amount of nickel that Tesla's using in the rest of its batteries. GM is planning to use that as their base battery across the bulk of their fleet. So I think it underscores, the damage cobalt, that massive price spike in cobalt did to its market. So people accelerated that switch to 80 or 90% nickel batteries. And again, I think that the fact that they know that that's the key to customer acceptance is you don't have to worry about running out of the battery at some point during your day. You're going to have more than enough range to get wherever you need to get to go. It's
fascinating times. It's obviously very early days. It's a nascent industry in that sense, where we're going to have to work out, are there going to be some standardizations of batteries, not just in one auto manufacturer, but across several? Will there be specialist battery manufacturers, or will the automotive companies want to retain that control in-house, because it will become very critically important to their brand?
Yeah, no, I think if you look at sort of what Tesla's done, over the last 10 years, the battery has been a key focus for them, because they realize, okay, they have grand plans and they're going to get very big, but again, they're competing against Toyota, GM, Volkswagen, who have tens of millions of car units. So the scale of those businesses is always going to give them some advantage. So they realize the one component in the electric vehicle, which is unique to the electric vehicle, is that battery component. So they need to get as far ahead of everyone else on the scale curve and on the product development curve to try and keep 2 steps ahead of the giant elephant, so could come in and squash them if they get any different. So that's why, again, right out of the gate, he was talking about a gigafactory, and you think, oh, they sell 1,000 cars. Why is he building a plant to supply batteries for 50,000 cars? It's because he realizes he needs to always stay ahead of everyone else on the scale curve. Again, like everything else, if you look at all the key components of the automotive, you will end up with a handful of winners who will become the main battery component suppliers. And again, for the big companies, they don't make much of their cars anyways. They just assemble them, right? And they rely on their partners to build the various components. So I think you'll have a few electric vehicle specialists who will, again, maintain control over as much of the supply chain as possible. And then for all the other car companies, there'll be 4 or 5 key battery supplier winners, who will provide most of the batteries for, all of the cars globally.
I want to know more really about this, because there's so many sort of derivatives and spin-offs, and there's going to be end-of-life battery recycling requirements. All the the people who maintain your cars and your fleets, if you've got a corporate fleet, you're going to have to be battery experts rather than engine experts. It's a real big change to society and the way the way we behave, because it's hopefully cleaner fuel, but there's also going to be a lot of new industries spinning up as a result. It's absolutely fascinating. We should talk about what's happening out there in the world of mining, because this is all very interesting, talking about batteries in the future and so forth. Yep. But us investors want to make some money, and we want to see what's happening. We've talked about your project, your business model, about getting to market quickly. You've kind of got a very accelerated time frame, but there are, and we'll talk about that another time as well. But it's you've identified a model that's going to work for you during one of the during the cycle. So, but I want to talk about some of the some M&A activity which has been happening in the market. I think BHP and Oz Minerals have been busy, but it seemingly doesn't look that exciting. But it probably is. all this low grade nickel. Is that interesting?
Yes. Oh no. I mean, again, it's fascinating. So again, for context, BHP spent most of the 2010s trying to sell their nickel business. In fact, in the early 2010s, the rumor on the street was, they were negotiating with the buyer for the payment that BHP would have to pay them to take the asset and assume the large environmental liability that was in place. That was how much BHP didn't like nickel back, a decade ago. Fast forward, and you now have the CEO talking about it, and to their credit, they're putting their money where their mouth is. So, 3 years ago, their Mount Keith was sort of the template for the large low grade mining operation. It opened in 1995 and has been running, running all during that time period, but it's coming to the end of its life. And they spent money about 3 years ago to open up a second deposit nearby, and so they're going to maintain production out of that operation. And again, it's a fraction of the sexy high grade core that you see in a lot of places. And what was fascinating in the past 2 weeks, I did not expect it this quickly in the cycle, but BHP Billiton bought another large. There's two of the better low grade nickel sulfide assets in Australia, and both of them are now gone. So BHP just bought a project called Honeymoon Well from Norilsk. They didn't disclose the price tag. I know, again, 10 years ago, rumor on the street was, they were looking for around, $100 million in that kind of dollar range. So I don't know if we'll be able to see from anybody's financial statements whether it shows up in a note somewhere. But the second one, which was sort of a clear market one, was Oz Minerals has a joint venture with a company called Cassini Resources for the Nebo-Babel deposit. This was discovered in 2000 by WMC and has been advanced. And it's in a more remote location, which again, if you're going to build a low-grade operation, is tough because you need a lot of infrastructure and capacity to process that material. But yeah, they paid $75 million, roughly Australian, for the 30% of the project that Cassini owns. So that put a $250 million price tag, on that asset. And I think valued it at kind of 0.3 to 0.4 times NAV of the pre-feasibility study that they had done on the project. So again, we're just getting started in the nickel space, and Oz Minerals has made several smart deals over the time period. So it's nice to see smart money starting to pick up nickel assets, this early in the story. So I think it bodes well in terms of what might be coming down the pipe.
But it does bode well. But I'm interested in the types of deals that big companies are looking at. What are these big companies looking for? BHP, they need scale, right? That's fine. Yeah. But there's going to be more and more M&A activity because there are companies out there with nickel projects, haven't got the funding, incapable of getting the funding because they don't have the management team to give confidence to institutions or family offices to get them over the line. So there are stranded assets out there. Do you see more M&A coming up for nickel, if not this year or next?
Oh, for sure. Again, I think just I guess a couple of things. One is, in terms of large lower grade deposits, just again looking at the copper space, BHP and Rio Tinto, I'm sure would love to buy a 2 or 3% copper project that can produce hundreds of thousands of tons of copper a year for 30 years. But I think we found the last one of those deposits in 1910. So where they are now is their portfolio, the majors, the mid tiers, their portfolio of copper is kind of 0.4 to 0.5% copper. Some new discoveries a little bit higher than that, but that's what they buy because they need something that's going to generate multi-hundred millions or billions of dollars in revenue for 20 or 30 years. So the best nickel discoveries of the last decade, the high grade Nova-Bollinger was the one got acquired in the mid 2010s, and that was the best discovery of that decade. But that started with a 300,000 ton nickel resource that produces about 25,000 tons of nickel per year. That was a perfect deal for Independence Group, given the size they were. That materially moved the needle for them. But that that barely scratches the needle for a Rio Tinto, or BHP. So I think they want assets that are of a scale and of a lifespan that do it. And in the nickel space, it's either large nickel laterite deposits, which have their own challenges, or that are typically found in some higher risk jurisdictions. But in the lower risk jurisdictions, it's basically the only deposits that kind of fit that bill are these larger scale, low grade deposits. So again, I'm not surprised to see these start to go already. But I think that's the thing investors need to get their head around, is that, oh, okay, why didn't BHP go buy some of these new high grade discoveries that look, from an investor perspective, oh, that core is very shiny, that's exciting. Why didn't Oz Minerals buy one of those projects? It's like, no, they need something that moves the needle, and you need to find a large enough resource to be able to move the needle for these companies.
But there's going to be, I don't know if there's going to be, but do you think there's room for consolidation in this space if people could get the money? Because once the price gets back up, the bankers start listening and they start sniffing around. They're asking if they're trying to work out how they deploy capital. We used to do it. We used to chase deals, okay? And when we were chasing these deals, the most fun we had was consolidation, because you put something together, sum of the parts, etc., and you could walk away with everyone's made a lot of money, so it's great. But then you've got to make those things work, which is the operation team's problem, not the bankers. So are you seeing talk like that in the market, or is everyone just got their head down at the moment, focused on their own projects?
The tough part for nickel is relatively consolidated already, and again, most of the supply growth has happened in Indonesia, which is kind of a no-go place for most Western mining companies. So what the issue that they're more struggling with is, okay, how do I get a toehold? How do I get a foothold in this business? Again, from a portfolio perspective, the majors, the last 10 years has really been about the bulks, right? Met coal, iron ore, and thermal coal. Well, thermal coals for the majors is now on its way out. And the challenge in China going forward is you're going to have, the new cores of the scrap steel are now ramping up in China in a big way as scrap becomes a bigger part of that market. So iron ore and met coal is going to be a little more challenging market going forward. So they need to find some more ways to keep moving the needle for their $100 billion businesses. And so battery metals is attractive because it's going to be a very high growth metal for a period of time. But the challenge is nickel and lithium are the only two that are big enough as a space that matters. And so there's just not that many big assets outside of Indonesia for companies to get to. I know a number of corporate development people at some of the larger mid tiers, and that's their. They started looking at nickel kind of a year and a half ago, and they're trying to think through, okay, we want exposure to this, and how do we do it? Do we buy, let's say, Vale's, been focused on iron ore. Do they still want their nickel business? Are they going to sell pieces of that nickel business off? So the mid tiers are thinking, should I buy, parts of an existing producer who might be a seller at this point in time? And there's just not, unlike in copper where you've got, the, First Quantum and Freeport, so if you've got sort of the big, the BHP, Rio Tinto, Glencore, sort of at the top of the food chain, then you have these large sort of specialists to an extent, and so you've got First Quantum and Freeport McMoran, right? And then sort of beneath that you've got sort of large largerish, of various sizes, but in the copper space, in Canada we have Capstone and Taseko and Hudbay Minerals, a number of other players. There's a whole sort of tiers with a bunch of different assets. In the nickel space, they're really, you have Norilsk, Jinchuan, Vale's nickel business, Glencore's nickel business, and that's that's a big chunk of what's not in Indonesia and the Philippines. So that's nickel assets when they're required, because there's so few ones that new discoveries, they always tend to trade out at a premium because there's just very little new product on the shelf, decade in, decade out.
Okay, interesting. That is interesting. It's fascinating space. It was certainly becoming fascinating to us at the moment, because you're in an interesting point in the cycle, and you've been affected by a lot of different moving parts at the moment. Well, look, Mark, I think we better wrap it up there for our weekly. We're in danger of getting into next week's topic. So next week we're going to look at a few charts. We're going to look at a few graphs and try and help people sort of understand a little bit more about the world of nickel. So appreciate your time today. Thank you.
No, thank you, and we'll see you next week.